Let me welcome on board Anshul Saigal as well. He's, of course, the founder at Saigal Capital. Anshul, hi, good to be speaking with you. What's your take on PSUs and all of these energy names? Apart from some sideways move, there is that uptrend which really continues. Take a look at NTPC, Power Grid, and, of course, the entire ancillaries of power sector, BHL for that matter.
Hi, Anisha. Pleasure to be amongst you. Um, there's a very interesting report that Bernstein came up with recently on the PSU space. And one aspect of that report was quite enlightening, which is that while PSUs have rallied quite meaningfully from the bottom, many stocks have gone up 2, 3x, some have gone up as high as 10x from recent bottoms. But if you look at the long-term valuation chart of these companies, of the general PSU index, you will notice that the PSU index is about half of the peak valuations that it achieved somewhere in the region of, somewhere around 2008 to 10. Given that prices have gone up so much and that we are anchored to recent prices, we believe that there is a top that has been formed in PSUs. But if you look at the long term, we are far, far away from the top in valuation terms, particularly in the power pack. Clearly, there is, for instance, NTPC used to trade at 3, 4 times book. Even after the recent rally, I think it's trading at about 1.5 times book. That tells you what is the level of upside that could possibly be there if these stocks would continue to perform the way they are, if their businesses do well, and if capital allocation in these companies, which was obviously under question earlier, remains as robust as it has been in recent times.
That you mentioned that Bernstein report, because Bernstein has actually come out with a note on power sector today, and they have a very interesting title, When to Run for the Hills, and they talk about how in the case of Abhimanyu Mahabharat, he knew how to enter the Chakravyuh but not how to get out of it, and that's, I think, the problem a lot of investors in PSU sector are facing. They've all got into it but don't know when to get off that rally.
Oh yeah, absolutely. Kunal, do you see anything in the power names where you are getting a signal that it's time to actually get off or get out of the Chakravyuh, as Bernstein says it?
No, I don't believe so. I think the mood for the power stocks is still looking very attractive when we look at the long-term charts. Now, remember that stocks like NTPC, REC, PFC, etc. These stocks have gone through not just few months of correction prior. These stocks have gone through 5 years, 10 years, and more of correction. And these stocks have seen a first round of a very strong pickup of price action for themselves. So there's bound to be a much more stronger, longer-term theme for these stocks. Now, what also matters is that in this larger scheme of uptrend, these stocks would probably get into those odd phase of correction as well. So, the indicators would tend to get overbought. These stocks would get into those periodic 10-15% correction broadly. But then I think that's where trading opportunity rises, where these stocks, if they provide a correction of 15% broadly, then I would believe that that could be a good opportunity to try and chip in.
The other space today which has been in focus is the entire steel pack, and this comes in at the back of the stellar rally that took place all through last week in the steel names in specific, be it Tata Steel, SAIL, or for that matter JSW as well. CLSA came out with a note this weekend talking about JSW Steel. They've downgraded it to a sell now from the earlier underperform. They've cut the target price to 730. For Tata Steel, again a downgrade to sell from the earlier outperform, cut the target price to 135. They're saying that the profit pool in India should incrementally move towards miners from converters as the steel capacity addition picks up pace. They're also saying that valuation for steel stocks have risen while spreads are at a trough, and the consensus estimates are not quite factoring in this spread compression. But just wanted to understand, Anshul, what your take is on the commodity pack, especially when it comes to steel.
Hi, Aisha. Yes, as regards steel, over the next 2 to 3 years, there is going to be substantial capacity added to the system in India. And given that, of course, demand patterns, unless China rebounds back, much more significantly than what it has been doing in recent times, demand patterns have been kind of tepid and they've been going up incrementally. But as we all know, capacity comes up in chunks. chunks. Now, if you see capacity coming in chunk, obviously there is going to be demand for ore, but prices of steel are going to be under pressure because there is going to be oversupply. And hence, there is a likelihood that margins contract while stock prices of many of these steel companies have actually gone up quite significantly in the recent times. This stock price appreciation doesn't kind of build in the contraction in spreads of steel companies that lies ahead of us. Now, if this trend was to play out, as I said, unless China kind of breaks out and the economy starts doing well, if this trend were to play out, then I wouldn't be so bullish on steel. But obviously, the market disagrees with me just now. We'll have to wait and see.
So that's about the steel sector. But what's your take, Anshul, regarding the healthcare space? Because people used to talk about the high valuations, that these stocks are not giving any opportunity to buy. Now, there is an opportunity on the table. For the last 4 days, consistently, all of these stocks have been in the red, barring maybe a couple of names on Saturday. Is this the time to accumulate positions on healthcare or stay away because there might be lower levels coming?
Even in healthcare, there are multiple segments. Of course, there is hospitals, but then there is also path labs, etc. And we have to look at each segment within healthcare separately. As regards hospitals, I mean, what we are witnessing just now is that margins are at an all-time peak. That is, I'm talking of EBITDA margins. And alongside that, we have seen multiples also being at all-time peak. Now, as a value investor, someone who seeks arbitrage in the markets, I'm not someone who would chase these valuations at such high margins. And so I would be on the sidelines for the moment till valuations become more reasonable and or earnings catch up. So I'm not too thrilled by valuations and the recent correction, minor correction, 5-10% in many of these names. I would be on the sidelines.
The entire healthcare space has been under focus, with the apex court now focused on standardizing healthcare rates across the sector. Private sector healthcare providers are now fearing a catastrophic financial burden as well. In fact, we caught up with managements of Narayana Healthcare, Aster DM as well as Yatharth Hospital, and here's their opinion.
If you look at healthcare costs going up in this country, that is simply a factor of more and more treatments being available. The reason why people are finding it unaffordable is that you can't expect people to pay out of pocket for a lot of things in healthcare. So there are solutions that the industry is willing to propose, but without getting into draconian things like price fixing for everything. We still have a huge way to go. There still needs to be an incredible number, not just beds, but medical equipment and doctors and nurses in places where you can get treated, even in the largest cities. Forget about tier 2 and tier 3 towns. So there's a long runway of growth and demand.
Private healthcare space is an inflection point. You see a huge penetration of the organized player into the tier 2, tier 3 cities. For example, Aster Group, 70% of our beds are in the tier 2, tier 3 cities. We have only 30% of our beds in metro. This momentum should not be lost. 1A. At the same time, if the price regulation is going to help the patient, Indian patients or any foreign patients who access our healthcare, for making it affordable, and then also access the quaternary and tertiary care facilities in India, what we stand out for in the global market, it's a right move to have. But at the same time, we need to be mindful of how much are we going to regulate the private healthcare players.
I think in general, regulating price rates in private sector is not the most practical situation, not the most practical solution to making healthcare much more affordable. As far as we are concerned, I think our pricing is already quite less compared to other listed players. This advance in technology over the course of last 3 to 4 years, getting them and providing them to the patients, that's the utmost priority for every hospital. Yes, doing that in an affordable way and making the margins meet and making the capital, deployed have good returns. That is something I think hospitals are evolving in that model.
Okay, so that was the commentary coming in from the stalwarts of the hospital sector. But time now to slip into a very short break. But as we do that ahead of International Women's Day, ET Now is getting you insights from some of the most inspiring women leaders in the country. Here's what our Radhika Gupta has to say about how more women are entering the capital markets.
I think it's really good that more women are coming forward to take control of their own money, whether it's by investing in stocks, investing in mutual funds, and investing in general. And I think it's two things. One is it is the increased confidence of the Indian women that is represented not only in the markets but in many other things, to start a business, to speak for herself. And Indian women have always been great CFOs of their own homes, great budget keepers, great savers. It's now translating into money. The second, I think, is the difference between saving and investing is aspiration, because when you save, but when you invest, there's a sense of optimism, there's a want for growth. And I think it reflects an increased aspiration and increased desire for growth. So it's confidence and growth coming together.
If we talk about predictions, do you think that more women will step into this world? What is your opinion on that? Like, whether will women come towards more financial markets, stock markets, investing the money?
It's inevitable. See, if you look at the economic survey also that came out, after a dip in labor force participation is actually back up in India, which is a very encouraging trend. If you look at AMFI's data on mutual fund participation, one of the faster growing segments is women. So India will financialize, and as I said, as you have a generation of millennial, next gen women who are more confident, who are more aspirational, investing and equities is inevitable.
What is one advice that you would like to give to all the women?
So the one I have in my book, which is Find Your Sky and Learn to Fly. I think each individual has a different set of aspirations, but the reason I say find your sky is those ambitions should be big, and learn to fly is to learn to embrace those aspirations and fall, fail, but eventually learn to fly.
Back with closing trades right here, Nifty now, and the closing trades for the index are just about in consolidation mode. We've got a print of 22,500 here for the Nifty future, so it's pretty much status quo from that Saturday special session. BHL still clocking gains, about 11.6% higher. NTPC holding up, BPCL, ONGC as well looking good, and then of course there's a decent move coming in on Taracom today, holding about 4% up in the green, along with SAIL, which is, I think, one of the only metal names, or steel names rather, which has made a remarkable recovery from that opening low that it had. And from there, it's climbed up quite a fair bit, 4% higher as we speak right now. And then there's GAIL as well, which is looking quite okay. And at the same time, you've got a JSW Steel, which is still under pressure, down about 2.5%. So SAIL in that sense is the only steel stock which has made a marked recovery thereof. But Kunal, given that Bank Nifty expiry is on Wednesday this time, what levels and what price action do you see?
So yeah, I think Bank Nifty expiry is now changed from Thursday to Wednesday, at least the monthly and the quarterly expiry. But on the indices front, and specifically on the levels, I believe 47,800 for the Bank Nifty, which was also coinciding with the previous swing high, that remains to be a minor resistance. I call it minor because of the way the momentum is shaping up for Bank Nifty. I think this resistance should be taken out pretty quickly for the index. On the downside, we are now above the 50-day moving average for Bank Nifty. So that would now act as a support, and that level is close to 46,700 for Bank Nifty. So a stronger support at play, the 50-day moving average, which is 46,700 mark, and a very minor resistance at 47,800 levels. Once that gets taken out, then we should be looking at Bank Nifty potentially hitting back the previous lifetime high of 48,000 plus levels.
Okay, let's wait for that 48,000 mark on the Bank Nifty. At least it's moving in that direction. But Anshul, if it does move in that direction, which is that private banking lender which you think is likely to outperform?
First of all, Anisha, what's happening is that India was so far in the last year moving on one engine, which was Indian growth doing very well, and that leading to markets giving a thumbs up to Indian stocks. But this year, we've seen Nikkei break out of a 35-year low. We've seen the European market stocks index in particular break out of all-time highs. we've seen the S&P break out to all-time highs after a 2-year hiatus. Now, this tells you that there is a second engine which is building up, which is that of global markets supporting the Indian markets. So clearly, that adds to Indian market strength going forward. Bank index, I think that the broader markets in banks and the financial sector in general is quite attractively poised. Even the recent read on credit growth has been quite robust, 20% credit growth after a strong year the previous year. Now, that tells you that there is something happening in this space which analysts by conventional methods cannot gauge. And then if you trickle down to which stocks to look at, I think you hit a dart in the PSU banking space, and you'll pick a stock which is in the range of 5 to 10 times earnings, despite a significant rally in the last few years. And these will be just over 1 time price to book. I think that space looks interesting. Old private sector banks, that space looks interesting. And within the private banking space, the large private banks, I think that I would go for banks which have been kind of laggards in the last 2 or 3 years, where in this one particular bank there has been a large merger which has skewed the CD ratio, credit deposit ratio, against it. And for instance, in HDFC Bank, the CD ratio is 109%. Compare that to other private sector banks, which are in the range of 90, 91%. That tells you that HDFC Bank is having to take higher cost credit, higher cost liabilities to fund its credit. As a result, NIMs are under pressure, but that reflects in valuations at 2.3 times book, under 15 times price to earnings, in comparison to Nifty being 18, 19, maybe even 20 times earnings. Clearly cheaper than the index. I don't remember when this bank traded here. So I think that, for a safe bet over a 3-year period, this doesn't look too bad. I'd like to give, this is just for illustration purpose. I don't own it. I'm not recommending it.
Okay, thanks Anshul for joining us today.